And as we look at things, you're going to see some of that through the balance sheets and the corn bean spread, which is what you're staring at on the chart. So the weather here is great for planting, right? We're dry, except for in the Delta where we're too wet. But we're so dry in spots, it's putting a lot of pressure on. It's going to put a lot of pressure on guys. We have to have rain, and the yield pressure that we have for this crop has never been more important. I've been hammering that the last couple of weeks, in that if we have yield hiccups, we have major problems um, on our balance sheet. And compounding that overnight and this week is the forecast in the growing conditions for the safrinha crop in South America. They're very dry, it's turning hot, and there's no rain in the forecast. And so that crop is on the verge of being in trouble. And so I think our market has jumped into that. So now just a little bit about psychology. Those of you that know me well, this game is mostly mental. You get in your own way almost every time you get into trouble in this business. And I think a huge part of that is the fact that our bodies respond to trading biologically. Whether you're a farmer or you're a trader taking positions in the futures market, or you're just an investor, you put a trade in and the market does the opposite, and you feel something. Something chemical in your body happens, and that's real. It's perfectly normal. And so what we do is most of the time we tend to focus on what we call our method, right? We look at technical indicators and we look at all these things. But what I've learned over the years is that a good method is what you want, but you need to master your psychology. So most of the time, most of the things I read are about psychology. You have to master it and understand your emotion. So, for example, I'm an inherently bullish person. And those of you that know me, it's very obvious. I like it when markets go up. When I see green, my brain releases dopamine. When I see red, it doesn't, and so it makes you sad and cranky. And you have to understand that that's rooted somewhere deep. It's not just because I like it when it goes up. When I was growing up where I grew up, most of our friends and their families and my family are tied to production agriculture, and so we tend to they tended to be happier when things went up. So I think that rooted deeply into my psychology as a kid, and that remains today. That's not good or bad. It's just reality, and you have to know you have to understand that in your own psychology, in your own operation, to know that you're dealing with emotion, and managing that is really critical. So that's why we look at charts. We look at charts because they're not emotional. They take all that away from us, and they just do their jobs, right? They don't care about how we feel or how anybody else feels. So what are the charts telling us? And that's what we tend to that's what we try to reconcile. So in front of you is the corn bean spread. And this spread has plummeted this week in favor of corn. And it's almost like it's shocking, because we've talked now for months and months that the soybean balance sheet is negative, right? We have 120 million bushel carryout. We've got to plant the acres. We've got to plant the crop. And soybeans should just be going crazy, and we should probably have the spread over 3 in order to protect it. Well, enter the resurgence of gasoline demand. Feed demand is off the charts. China's trying to replenish everything that it sold. You've got world food grain prices going crazy, and we refer to corn as king corn, right? It's because it commands most of what we think about. It's the most fun to plant. It's the most fun to harvest. It's fun to get all those bushels flying everywhere, and so we call it the king. And I think what happened this week is King Corn recognized that that it actually may have a little bit of an issue, and I'm going to show you that here in just a second. So what you've had is you've had new crop corn accelerate past new crop beans and collapse the spread because corn cannot afford to lose any acres. Here's what I mean by that. Here's our WASDE, okay? So this is what the USDA did. They finally fessed up to a portion of the problem on the demand side, and they lowered the carryout just a little bit. So we have 1352 that's down 150 million bushels. This is what corn's looking at, is that if we plant what they said we're going to plant at 91.14 million acres, and we have a 2000, this isn't 2012, this is like a 2016, 2018 number, where we grow 90% of APH, or we miss 179.5 by 10%. If we miss that because of drought or some issue that happens during the growing season, then corn is out. We don't have any corn. And that's with a low demand number. So corn has no, this is a 1% stocks to use. And so this won't happen. Like, this is that's too tight on corn. The king can't give up that much. But it's got to balance this against this problem down here, which is soybeans, because they're negative if we have the fifth highest yield on record. So this balance sheet in this market is trying to reconcile these massive problems that are being compounded by growing problems in South America. And so the beans, like everyone says, well, beans are done. They're not screaming higher because of ASF in China. Brazil has too many beans, and they're going to dominate the export market for the next few months. It doesn't matter. The market's known about the South American crop for a very, very long time, and it still has not reconciled. So you're not going to solve this problem with lower prices. If there's anything that you take away from today, is that lower prices magnify this problem. They do not solve it. So I think corn has taken the lead for now, and I think it's going to stay there until it's darn sure that it gets the acreage. But beans can't just sit back and let them have it. So I think that we're going to run down here, and I think that beans are extremely bullish. I think that the bean balance sheet is so tight, and the world's got such problems with both of these. The way you trade this spread, right, is you would be short corn, long beans, and I don't think that's it at all. I think you just got to get long beans because it can't give up acres to corn. We can't plant less than what the USDA said we were going to plant. I mean, if we were to drop this carryout number down on soybeans, it would just be crazy. And so it can't afford to give up the acres that they're talking about giving up. So it's interesting how the market's responded here. It's given the king the lead first, and then off we go. So let's look at what's happening on the weekly charts. Okay, so we've got this big nice move from August. We've rallied corn from $3 a bushel to $6 a bushel. Let's call it that. Okay, so we have a $3 rally. Well, psychologically, what this sideways move did, right, for weeks, is it scared everybody. The fear is palpable. Everyone just knows that we're gonna just get hammered and we're gonna revert in a couple of weeks back down to this $3 level, because and this is the psychological thing we talked about. This is what this does. See this big, wide, sideways move? Psychologically, this just hammered you guys for years and years and years. And so it feels like that should happen again. And that's not what this is telling us. I mean, we consolidated right at this critical spot right in here at 550. We consolidated here for call it 10 weeks before we just started coming up higher. And so where are we going to head? I think we're headed towards the 630 level first, if not 650. And the fundamentals support it because we can't run out of corn, and you can't have demand increase anymore. So I think that we're gonna go ahead and extend this on old crop. Let me show you the old crop chart. We're just starting to expand. You see the shelf right here. This is the last 10 weeks or 8 weeks or whatever, where corn just consolidated from 560 to kind of this 530 level, right? So we finally broke above it last week, and then we immediately came down and tested it. We've broken above it again on the report, and then we came right back down and tested it again. So you've now got 2 breaks and 2 tests of this critical level right in here. And now we seem to be exploding up out of here with bullish volume. You got open interest increasing. You got a lot of things to look forward to. So I think this move extends on up. 602 would be the first target. 630 would be an additional target, and it may go beyond that even too. So I wouldn't be selling any new crop. Let's look at that. New crop is even more bullish. It broke. It left this gap here. This is either a measuring gap or it's a continuation gap. If it's measuring, I don't want to put anybody on the floor, but it measures from 358 to 477. So you got to call it $1.20, and $1.20 from 480 puts new crop corn up at $6 if that's a measuring gap. If it's an exhaustion gap, we don't have any signs of that. I think it would have filled already within the first 3 days. So signs point to this is either a breakaway or a continuation. And new crop corn's working higher. Why? Because I just showed you the balance sheet. It has to go by acres, and it can't let that thing get negative. It's got to ration, and it's got to protect itself. All right, so beans. Beans are this is new crop beans, right? Think about the headlines: ASF, Brazilian crop. Everything's just going to go down. We're going to plant so many acres in South America. It's going to make your head spin. Well, we better. And we have to. So even with all of that bearish news, new crop beans didn't do anything. They didn't break at all. And so even with corn pulling away from it and collapsing that spread, I think beans are just gathering. They're gathering steam because they can't afford to take it either. So I look for beans to explode the new highs and regain that. And regain its relationship to corn. I don't know if that happens today or if it happens in mid-May. I don't know when that starts to happen, but I don't see beans going down if corn is going up. Our balance sheets are just simply too tight. So what about old crop? Old crop, right? Everyone says, well, if you read the literature, everyone says, well, old crop has to go down because South America has too many beans, and the boats are lined up out of China, and they're not grinding it because ASF is real and it's big and it's slowing things down. Guys, if that were true, then this market would be $1.50 cheaper. If that were actually happening, we would be flipping this bean market back to a carry if there were plenty of them. We would not be just simply maintaining and holding. So the way I look at this chart is that this entire move from the middle of January through today has all been corrective. I think that this is the equivalent to a pullback that probably in a normal market would have pulled all the way down to this $12 level. It just couldn't do it because the fundamentals are so bullish. And it feels like beans want to roll over and die. And certainly meal hasn't helped itself or hasn't helped because, but just wait. If meal picks up its head and starts to rally, then beans are going to scream higher. And I'm not so sure that we're not closer to that than not. So I think beans are going to new highs. I think they're going to blow past $15 because we're too negative, and we're now dealing with the situation where corn is is below 5% on stocks to use as well. We can't let them break because we're just too tight. So here's a chart of soy meal. I don't trade soy meal. I'm not a soy meal expert, but here's what this chart is telling us. Everything on this chart is telling us that this is bottoming. That this is a counter trend move. So we've sold it off from its peak, and we had this big move up. Now we've retraced the entire thing and taken out a new low, but we're not accelerating to the downside. Volume's not picking up. We're starting to get some divergences on all these shorter term indicators. I would look for meal to make a low soon, and that is going to really accelerate beans as it starts to turn and move higher as well. All right, I'm not going to get into wheat because wheat's going to follow corn. It's got its own bullish story. We're feeding it like crazy. We're feeding it all over the place, and wheat doesn't have any margin for error either. The USDA just hasn't fessed up to it. So when the USDA does start to reconcile, things are going to get really hot. But I think the market's going to figure it out before they do, and we'll have topping action prior to then. So new crop corn, I wouldn't do anything. Beans, I wouldn't do anything. This is exactly what we've wanted for months, which is an acreage battle, and it's just starting, and it started with corn winning the first round. So I think we just sit back, we wait, and we let the market do its job and tell us when it's time to sell it. That is what I've got for you today. Remember, there is substantial risk trading futures and options, and if you're going to do so, please do it in light of your own financial condition and financial situation. If you have any questions, we would love to help you. Call us, and we will talk to you next week.